What's up, everybody? Eric here, and I'm here with my favorite gay. Well, second favorite gay. I think I told you that because my godfather's my first favorite gay, but my second favorite gay, my favorite Twitter gay, the Frugal gay. And I've had the pleasure of kind of interacting with you passively online. I don't know. I like the content you put out. I like interacting with it, and I like the message that you bring to the table. So first off, welcome to the Outlier podcast. I welcomed you to hop on top. I love being able to say that, so I got to throw it in at any point I can. um, Outlier podcast, hop on top. But yeah, welcome in, man.
Well, thank you for having me. I enjoy working with you or interacting with you. We did a spaces, so I could say working with you
Yeah.
on that. But yeah, you also produce different content than everyone else, so that is perfect name for your podcast and one of the reasons that we started following each other. So thank you for having me.
Yeah, man. And you're actually one of the first people coming onto the channel that brings an alternative wealth development approach. It's actually something that I talk to people about. So I started creating wealth through trading, but then I got into things like real estate, angel investing, so on and so forth. Most of the channel so far has been about trading. So I think it's super cool to bring people like you onto the channel that have had a very different approach. And I think the way that you literally have bootstrapped it. So if you could, I'm pretty familiar with how you started working at a movie theater, then you started like flipping products, but could you talk a little bit about just a story arc of how you've gone about creating wealth? And we could dive into specific pieces because I think there are things in there that even if somebody doesn't necessarily resonate with flipping bras, because I tell you what, I don't know fucking shit about bras, but I still think they can take a lot away from that mindset and the way that you look at markets.
Yeah, so bought the first property as a house hack, which I didn't call it house hack when I was 21. I just called it a duplex and I lived upstairs and rented out the downstairs. And I bought that for two reasons. I bought it because I was making $8.50 an hour working at the Gap, and they're like, you can basically afford nothing, but if you go get a multifamily, we can use the rent from the multifamily to qualify you. And two, I was paying $375. This was 2004. This was Toledo, Ohio, and I did not want to pay $375 in rent. So I'm like, if I buy this house, which was a duplex, which was $90,000, and they pay me $600, I can live upstairs for $138 because my whole mortgage, tax, insurance, and everything was $738. So it was a way for me to stop paying so much for rent. And when I look back on it, $375 is a crazy low amount of rent for 2004. And I remember when I got to Texas, I had moved to Texas a few years later and my rent was $675. I'm like, oh man, I got to figure this out even quicker here because this is way more than $375. So I started at 21. I got cocky. It went really well. I still own that one in my portfolio. And then in 2005, I bought another one, and that was a money pit all 10 years that I owned it.
Sick.
And then I got to Texas. I took a job with the movie theater. They're like, come down to Texas for 6 months. We'll move you home 6 months later. I was done with college. I was like, yep, I'll go to Texas. And I have not moved back since. So I started buying in Texas in 2009. And I just made it a priority and I would have started in 2008, but when I went to the bank, they're like, your DTI, debt to income ratio, is ridiculous. We're not going to loan you anything. You have these two loans already. So you got to get rid of credit cards. You got to get rid of all of this and we'll give you another loan. And I just went and I'm going to buy one a year and I'm going to figure out how to buy one a year. And I've kind of done that since 2009.
Yeah, I love that. So when you were first kind of scraping together the capital to purchase the properties, you mentioned, that you worked at a couple different places. You worked at the Gap, then you worked at the movie theater. When did you start getting into like flipping the different merchandise that you get involved with and post
That
about?
that was always in the background. It started in college, and Gap offered tuition reimbursement, but that paid for tuition, but didn't pay for books or parking passes or all that. So I started, like, eBay was just kind of getting popular. It didn't even have buy it now yet. So I bought this shopping cart of purses at a closeout store in Cleveland. They were $1.50 a purse. And um, I sold them two at a time because I had two colors on eBay and would sell them for $60 to $70 a piece because they were diesel brand name purses that people wanted, not necessarily in Cleveland, but or in Toledo, but people around the country wanted them. So I started there, and that helped me pay for the rest of what wasn't covered with tuition reimbursement. And it helped me because I was still working at the Gap. So I had a little income to cover my rent and my other bills. But yeah, that has always been, and right now I'm sitting in my eBay room. It's just one of those that I had two eBay sales come through today. I can do as little or as much as I want. Whenever I have a really expensive month, I'll ramp up stuff and start listing like crazy and sending out offers. And there's times like last year when I was working on the Frugal gang, getting it set up, I just kind of put it on vacation mode for a few months.
Yeah, that's so cool. And really the point that I want to highlight there, it's something again that I talk a lot about, but you have a different approach to it, which I think is so massive because when I was in college, I was trading at the time. That was kind of my primary moneymaker, but then I was also buying and selling motorcycles and cars. I would find one that's broken, fix it, and sell it. So it's literally a similar version. But the reason why I like yours more is one, obviously the technical expertise is easier, right? There's an easier barrier to entry. You obviously have some affinity for fashion and stuff like that. So it kind of also doubles off of something that you generally seem to like. Is that how you got into the world of moving things like purses and those kinds of items? Or how did you pick that market?
So it was by default because I had worked at the Gap when I was 16, and you see who's coming in and shopping. And it's, even though it's, the store was set up 50% men's, 50% women's, it's about 85% of the women are doing the shopping anyway. So that was the item that I started with, and it was cheap and inexpensive to start, and it was under $100. And I just kind of fell into that, where now I do makeup and I do, discontinued colors. There's a lot of money there because people like this certain item. And I saw it all the time when I worked at the Gap. They'd be like, oh, I only want these jeans or this cut, and you guys stop making them. So that, made sense to me. I'm like, well, if they like it, they're going to come back for it. And that's a lot of what I do. Even with my real estate, I'll buy the junk that, and that's what I did in Dallas in 2009 because I didn't have a lot of money. So I bought the junk that nobody wanted, and I made it nice. And I, like you did with the motorcycles and the cars, you did the improvements. I made it look like one of the nicest ones. And I started with condos because that's what I had access to. That was what the investors ignored. So I'm like, okay, I'll do the condos. I realized that I have HOA and this, and it was a very small cash flow on them
Sure.
at the time, but it was my way to get my foot in the door. So I have always been in the kind of buy and hold mentality, and hold till it's more profitable. So like now I'll buy stuff and I'll sit on it for 6 months or a year until all the other resellers have sold through theirs, and then I'll plop mine up and it's top dollar because no one else out there is selling it.
I
And
see.
that's been my method since then. And it was just out of experience and watching trends and seeing who's buying what.
Yeah, well, the first thing I just want to highlight again is the hustle, right? Like obviously you were already starting. That's I honestly think that's one of the reasons why I identified with you so quickly is because like game respects game. Like you can see a hustler, somebody who's doing that. And I think that comes through even in your approach with, like your side projects, which is super cool. So when you started getting into real estate, you started with what you had access to, which is another like really important point. Because even if you look at a lot of, I'm 32, so most of my peer group are millennials, and a lot of them are complaining about not being able to find a house, right? So they're obviously in a market that they're not competitive in, whether they just don't have the finances to support it. When you think about the evolution of the properties, you started with what you had access to. What has that turned into over time as your access window has opened significantly, I presume? Or do you continue to stay in your area of strength?
No, I have definitely traded up. So like that condo that I bought in 2010, I bought it for $14,000 back then. I sold it in 2020 for $85,000. I turned that 85,000 into two multifamily properties now. So I did a lot of trading up over the years where it didn't make sense. I'm about to sell one right now that has started to become cash flow negative because the tax keeps going up on it.
Mm.
And trading it into things that make sense. And I think that that's important as well. Like last year, I did nothing but buy. So when I got to the at the end of the year, my accountant's like, you're negative. And I'm like, I know I invested more than what I produced out because I didn't do any strategic selling last year. He's like, you got to start strategically selling one or two of these a year. So you're not negative on paper and not constantly, because what I was doing last year, I bought 5 last year. I was just reinvesting everything that I was making into those 5 properties. So I wasn't taking on a ton of debt with them. And I think that that's important as well. So strategies are going to change over the years. I can't go and buy a profitable condo right now. It just wouldn't make sense. And it did make sense when I started, but there's a lot, especially in the Dallas market, that just they don't cash flow anymore. So that wouldn't be a strategy. But if I were starting over from like I have nothing, I would start with a condo in Dallas again, and I would house hack and rent out a room in it, or that space, so I could do it that way. And that's what, because I get that comment as well from millennials, is I can't do that in my market. There's nothing like this in my market. We don't have, this just isn't feasible. But when you really dig down, and I had a client, and I really respect that I had this client. He was in LA. He was a server. He was working at 3 restaurants. So we started him in a condo that was 475,000. He rented out the bedroom, he rented out the living room, and then he had sectioned it off so his room was the dining room, and it almost covered his entire mortgage. So I think that there's ways, but sometimes you have to do the not fun work. And that's what people are like, well, I don't want to live in a dining room.
Right.
Well, you know what? He lived in a dining room for 2 years, and he bought this thing for 475 and then sold it for 550. So it appreciated 75,000 over the 2 years. And guess what? Now he's into, a single family home. So I think that that's something that a lot in our age bracket, I'm older, I'm 8 years older than you. I'm 40 now, but a lot of people don't want to do that crap in the middle.
Yep.
They just want to get to the single family home or the dream home. And it took me, hopping from 10 different places around Dallas to get into the dream home. It wasn't like I just started with that.
Yeah, to be honest, that's one of my frustrations actually when I see millennials complain about that, because I always think like how it's like it's almost conceited, like they think they're owed a certain standard of living. And I think about like I'm in my 3rd house now, and my very first house was a attached townhouse. Same thing, right? It's because it's what I could get into, and then I rented that out. Same thing. So yeah, I don't know. I get, it kills me when I see that shit. 'Cause the other thing I'm also like, when I see millennials complain about that, I'm like, what the fuck have you done for the past decade? What did you do in your 20s that you just have nothing now? Like that just doesn't make sense to me. I don't get it. So going back to your evolution of properties though, I am curious because you talked about Dallas, and Dallas strikes me as a pretty competitive marketplace. And it sounds like that to be the case, being as you're saying you can't get like cash flow properties right out of the gate. Why do you maintain exposure in those same areas then, or do you buy in other places? Because I'm pretty sure you buy in other places, and I'm curious how you do that. Because I think you were talking about Ohio at one point, if I'm not mistaken. But I'm curious how you think about the geography of what you're picking up.
Yeah, so I still buy. I bought one earlier this year in Dallas,
Okay.
because of the appreciation. It's a very small cash flow on it, but the appreciation is wild. And Ohio can't even touch that. And then, yeah, Ohio is my other market where it has tiny, tiny, tiny appreciation, where like that duplex that I bought when I was 21 for $90,000, I could probably sell for 110, 120. So it just doesn't have the appreciation like Dallas, where I've bought stuff, for 14,000 and turned around and sold it for 90,000 10 years later. So I think being in both markets is key. I want the cash flow from Ohio, but I want the appreciation from Texas. And I think staying in both and ignoring one or ignoring the other is a mistake. And that's what I see a lot of investors, there's one in particular, he has 8 or 9 units, and they are all cash flow negative. So he is banking on that appreciation, but he's like, hey, I want to leave my job, but I can't because I have no cash flow from these. So the exposure in both has been something that helped me get out of the job, that helped me, continue to grow this. And I think that just going with it with the I'm going to have the appreciation on the back end, or I'm going to have this, is a mistake. And that's why I was all Dallas for 2009 to 2017, 2018. And then in 2018, I'm just like, man, none of these make sense. So I bounced back up to Ohio, where I had bought the first one. And I'm like, well, these cash flow great. This is a $600 a month one. Why would I not do this? And as opposed to allocating the money into something down here. So that's always been my approach with real estate is I want both, and I can't get both in the same market now. Dallas I did for a while, but just as the house prices continue to go up, it just doesn't make sense on some of them. And that's why I'm selling the one that I am, because it's a cash flow it turned cash flow negative this year. We tried disputing the taxes, and it's just better to sell that and reallocate the money into another property.
Yeah, I love that. And you hit on, again, another thing that I talk to traders about specifically. Traders are notorious. They'll say, like, I'm an options trader, or I'm a stock trader, or I'm a day trader. And all of those things kind of highlight that there's only one thing you do. Either you just day trade, you just trade options. And I try to encourage people not to become myopic, because there's opportunity across markets, and that extends beyond the subsectors of trading. But as you can hear, it sounds like you see the same thing happening in real estate, right? Where somebody's like, oh, I want the appreciation, or I want cash flow. And I think it's interesting that you highlighted a way to balance both. A personal question I have for you is, I've recently generally moved from away from residential real estate, focusing more on commercial real estate. And there's a couple reasons for that, but I'm curious, do you have any exposure to commercial real estate or proclivity to move into that space? If so, or if not, why?
Yes, I do. I have one commercial space, which is a mixed use, which is residential up above, commercial down on the bottom. So I have 4 tenants in there. And that fell into my lap because of a poor listing. The agent just put it up as like a 1-bedroom apartment. It sat on the market for months. And then we made a really low offer, and they're like, no. And then they came back, and then they're like, well, maybe. And then they're like, if we don't sell it to you, we're going to lose it to foreclosure. So, because we owe so much in tax. So they took it, and it was just because it was a poor listing. So I do have multifamily. I do have the one commercial space, and I am open to it on the right case by case basis. Like right now, when I was in Ohio last time, there was a potential like 15-room hotel. And if it makes sense, and we were doing a feasibility study on it right now, maybe that would make sense. But I'm not going to jump into something that's doesn't make sense. And that's another thing that I see investors doing, is where they'll buy stuff banking on, oh, we're going to see this coming, or we're going to see that coming. And that's okay to do with a little, like for instance, I bought a property in Dallas knowing that gentrification was going to go that way, and it has gone that way, but it was still cash flow positive even if it didn't go that way. And sometimes investors will jump into that stuff and just bank on that, and then they're like, well, it's cash flow negative, and if gentrification doesn't move that way, or this development or this business doesn't pop up, it's negative then. So I don't like that, jumping into it with that only mindset. And I want to tell you a story real quick.
Tell me.
Because this just reminded me. I bought they had a closeout store that basically was like an Amazon and Target return dump center.
Oh, cool.
And they had a bunch of, and I used to source from them a lot. They're no longer around, but they had a bunch of, they were wheel bearings for like Bronco cars, and they were like $3. And when I looked it up, I'm like, I think at the time they were selling for like 70 or 80 bucks for like and they were heavy, and my husband's like, don't get those. I'm like, no, these are like 70 or 80 bucks, and I can buy them for $3. So they took a while to move, but I know nothing about cars besides like what I was looking up on these certain wheel things for them. And I bought those, it was like a $12 investment for the 4 of them. And they, sure enough, it took a year for them to sell, but all 4 of them sold for 70 or 80 bucks. So I think being able, I'm not a car part salesperson, but being able to see, hey, these could be valuable is so important. And some people are like so stuck in that, I can only sell bras, I can only sell makeup. I don't sell car parts traditionally, but you know what? I popped those up on eBay, and 4 different people around the country eventually needed those and bought them from me. So I think that that's important. Being an investor is being able to shift your mindset and look at other options, especially when, that was the product that was available to me that day. So that's why I'm like, hey, it's $3 and it's worth 70. I'm going to try this. And it worked.
Yeah, it's like a saying I think about, if if it makes dollars, it makes sense. And like that's exactly what that sounds like to me. Um, Speaking of kind of the continuation of flipping merchandise, or I don't really know what you call it. It's not like merchandise, I suppose. I don't know. What do you call that process? eBaying? Is that the correct verb?
Yeah, I say I'm an eBayer when I meet
Okay.
people, and then yeah, so because I flip, I like I said with the tire part, like if I can make money on it, I'll go for it.
Yeah, which actually dovetails into my next question for you, which is, obviously you started with an area of at least partial eminence using your experience from Gap. Makes total sense. I think that's a great parallel. You start to pick up some of the traits of just being able to identify a good bargain and potential resale demand. Talk to me about that evolution into moving from just selling things that you're more familiar with things that you're not, but you can make an educated assessment about what it might be worth. Because I think that's a really important point, especially some of the people that listen to my channel. Some of them are in their younger 20s. And I think about ways for those guys and gals to find more sources of income. And a big part of that to me is to have a wider net of things that may make sense for you to flip. So can you talk about that transition into just being able to identify things that might sell well, maybe the market research, stuff like that?
Yeah, so it's definitely gotten a lot easier where you can pull out your phone and start scanning stuff, and that's what I did with the parts there. But it's I think what a lot of people miss because they watch these 30-second TikTok videos is you got to check the solds, and eBay still has the solds on there for 90 days. And if you can find a great item with no solds, but 100 of them listed, it's probably not a great item because you have 100 people already have it listed and it's at this price, so you're not going to make money on it. So I think understanding what to look for and how to look for it is key. And that's why I always direct people to the eBay app. I know it sounds generic, but if you click that filter, that's going to save you some time. And when you go over to Amazon, it'll tell you, hey, you can sell this. It's an ungated item, but they don't have the solds on there unless you pay. There's like services where you can pay $20 or $30 a month, and it'll tell you, they're going to sell 2,100 of these pieces per month. Um, I just over the years I've gotten better at it where I can tell you what size bras are going to sell and not sell. I can tell you what colors are going to sell in the makeup the quickest,
Right.
because when you're fulfilling the orders. So there's stuff that I can find great deals. Like I bought some Amazon, they were return boxes, from like Kohl's that had been sold off, and the majority of it was not great sellable merchandise, but it was worth it for me to buy just for certain items, even though I know I'm not going to make money on the rest. And usually what I do with the rest is I'll bundle it and sell it as a lot to someone else. But being able to quickly make that decision is also key because there's deals that'll come up. Like I use a couple of different deal websites, and yesterday they had face wipes for free when you order 4 of them, but you had to order other items from the store to get those. So you have to do the math. So I think and then once you're in it for a while, you see what sells and what doesn't. You
Right.
know what you're fulfilling. And it's the same with real estate, really, is you start with that. And that's what I did was in 2009. Well, it really progressed in 2011, 12, and 13. By the time I turned 30, I'm like, I don't want to work for another employer because I'm just going to have the same problems that I'm having with this employer. I'd rather build up something myself. So I think that real estate might be, and it took me getting to number 5 to see, oh, I can actually make money doing this. Oh, maybe I can use this as my way to get out of this job, as opposed to just going and waiting and asking or begging for PTO and all that.
Right.
And that is something too where people a lot of times when I look at houses with people, they see what is as opposed to what could be. And there's a lot of times where people pass on stuff because it's dated or has ugly carpet or, has terrible light fixture, but that can be fixed quickly, easily, and inexpensive a lot of times. And that's what keeps some of those ugly houses on the market. And that's, I try and stress that because I also get the beyond the I can't do that in my market. I get the landlord is scum, and I'm never going after that like newly built first time home buyer home, or even a lot of times the stuff I'm buying isn't habitable. The one that I did in August hadn't been lived in for 2 years. It sat there. It was a bank owned foreclosure. It was ugly. and it sat there listed for like 5 or 6 months, but it's a really nice house now because we spent 6 months fixing it and turning it into something nice. But a lot of times people see what is and just don't even consider what it could be. And that's what that house was that I bought in August. Is it's a really cute, good location house. It's just really ugly when
Right.
we bought it.
It's funny, when I was house shopping with my wife, she lived with me in my previous place, which was another townhouse. And when we were looking for where we want to move now, that the house that we're in now, when we bought it, it was like 155, I think 1.55. But we at first she didn't want to buy it literally because she didn't like the carpet, and then she didn't like the headboard. And she's like, well, if it's that much, I want it to be like what I want. But the problem with my wife is that she's an attorney, so she is like a perfectionist. And I was just like, carpet is cheap, carpet's real cheap. Like, think about the view, think about these other things. And I think what you have is a pretty specific skill set that a lot of people lack, the ability, like you said, to see beyond the current state into a future state. Has that always been the case for you? Or was it something that once you went through a few iterations of these properties that you were like, okay, I know where this can go. I have a playbook essentially built? Because one of the things we talk about in trading a lot, and I think this applies to life in general, is it's from a paper actually that studies successful traders, but it talks about pattern recognition. And it's our ability to synthesize very quickly different things that we've seen multiple variants of thousands of times over the years, and you can make really good decisions pretty quickly on that. With the houses, is that something that was kind of innate, that you could see what you wanted it to be, or was it something that you built over time?
I think it was something that I had to see because I knew that I couldn't afford the new build.
Mm.
And if I wanted to get my foot into this neighborhood or this school district or this house, it was going to have to be a fixer. And even my property, I bought one in the Old West End in Toledo. It's my short-term rental. I knew that I had to get a fixer on the street if I was going to get onto the street that I wanted. And I was fine with that because I was exactly where I wanted. It just needed a whole lot to bring it back to life. It was built in 1905, so it's a 118-year-old house.
Super cool.
And I think that that's something that people, get so stuck on, like the carpet and the shades and that. So I did it out of necessity, and it's worked out pretty well. I've bought some duds over the years. I had one of the 5 last year. I call it a money pit. It's a $60,000 total investment. It's still producing. I'm still hitting my 1% rule where I'm collecting $800 a month in rent out of it, or 900 out of that one. But duds happen. And I think that's the other thing, is people are so worried about what if I find this, or what if this happens. And with that one, the foundation, I missed the foundation on one side. So that was a $10,000 miss. I had to spend $10,000 to properly fix it, get the permits, get the city back out. And people are so stuck on, I don't even want to do this because what if that happens? Hey, guess what? I had 4 great ones and 1 dud last year. So what I made on the 4 great outweighs what I lost on the 1 dud. And even the 1 dud, I could probably turn around and sell it for what I have in it, even with the improvement. So it's not really like I lost thousands of dollars. Yes, I had a $10,000 hit because I missed a foundation on a inspection, but it's producing rent every month. It's um, it's a good one in my portfolio from that aspect, as far as it cash flows now. So I think that like you said, people get stuck in this analysis paralysis and don't want to take the training wheels off. The mistakes are going to happen, and that's, you want to minimize those, but sitting out completely because you're worried about what if I miss this, or what if I don't do this, or what if the interest rate goes down, or what if the value goes down. And that's it. I bought that one in 2000 when I was 21 years old. It was 2004. it I bought it for 90. It fell to 45, and like everyone was panic selling over me, and I'm like, I don't understand. I'm cash flowing $300. Like, so I just kept collecting rent the whole time that it was down in the $45,000 value, and I didn't really care. And then by 2016 it was back to 90,000 again. And yes, I was underwater, but it cash flowed the entire time that I've owned it, so I really didn't care because I ran my numbers and it made sense, and I'm a buy and hold investor. So I wasn't in a panic to sell it during that period where it had fell. And that's what a lot of people, this from trading, where they're like, what if it goes down? Real estate goes up and down. Stocks go up and down. It's part of it. It's the buy and hold investors. Like, I think that I just heard a stat about the number one accounts on one of these are the deceased investors accounts that have been untouched for years because they just, they're not in there constantly scrutinizing and buying and selling and doing this and doing that. So I think that there's a lesson there where let it run its course. Don't buy something if you think that you're going to need to sell it again in 6 months, because then I would encourage you not to touch real estate right now. Go into like REITs or something more liquid. But that is how I was able to get out of my job, was by being the patient buy and hold investor and buying the stuff that I could afford and I could fix and make nice.
Right. And you bring up a few things that I want to ask you about. One of which is, I think you hit on a really good point when it comes to people being able to assess risk. What I try to talk to people about is, because I still consider myself too risk averse, whereas a lot of people would look at me and think I'm very risk open. And I wish I was even more risk open. But I'm in a really interesting scenario. Like, my mom doesn't have a retirement, like I'm the retirement. So I do feel like a bit of weight to make sure that she's good. But anyways, the main point being is, I feel like when people have that mindset of, oh, if something goes wrong, then what do I do? I think that's one of the cool things about real estate, in that a lot of times you can still get something back. Yes, you might lose some money, but very rarely does something implode and you walk away with $0, which I think people, when they see risk like that, it should be more of a positive interaction, because that risk is there. That's why there's opportunity, because if there were no risk, there would be no opportunity, which leads me into my question for you. When we see people like flipping houses or rehabbing houses, one, there's a million shows on it, and either they make it look super easy or super difficult, and then everybody has that one friend that tried to flip a house and then it was a fucking nightmare, and they're like, oh, well, now I'm permanently scared away from that. What would you talk to people specifically that maybe have a constrained price bracket and they're kind of looking more towards fixer uppers? How do you assess the potential of one, and then how do you manage that project?
HGTV has a show on it. It's called Good Bones, and that's what I'm looking at on these properties. That's what I looked at on the ugly house in August. Was it had a newer roof, it had newer windows, it had a good foundation, it even had a newer furnace. Everything else inside of it was ugly, with the colors, with the flooring, with the carpet, but that was all stuff that we could fix. And I think if it has good bones, which is the furnace, which is all the major stuff, and even one of the say that you have an older furnace, that's a $5,000 or a $6,000 bill. That's not a that's five. It depends on the size of the house. It could be a $10,000 bill, but in general, you can fix even some of the bad bones. You can put a new roof on it. I just did a roof that was $14,000. So I think I always tell when they're starting, I'm like, don't bite off more than you can chew. Buy something ugly and dated, because that you can handle and you can fix up over time, and you can live in it while you're fixing it. So you can do this room because you have an extra $2,000 this month, and move around that way. So the bones of the house are the most important thing, and then the location, and then there was stuff with this house that I didn't even realize till we had put it up for rent, and I'm like, oh man, we're like this close to this school that just opened this year. Everyone that came, we had 100 people come through 2 showings. They're like, oh, we want to be here because of the school. And I'm like, man, when I was buying this a year ago, I didn't even think of this school as a family house, but it's a 3-bedroom property, and everybody wanted that so they could be close and walk to school and not have to get on buses and that. So I think understanding neighborhoods as well is key. And sometimes people are so, like, I had a client recently and he's like, I will only live in this zip code because I've only lived here. And I'm like, everything in your zip code starts at like 1.1 million. Like, and that's like a 300 square foot condo. Like, what if we went, I'm like 2 zip codes over, you're in like the 300 or 400,000. Yes, you have to drive the extra 10 minutes, but you're working remote anyway. So what if you started here and then worked your way back into this zip code? And that's another thing that I try and encourage people with. Be flexible, because it's not going to look like what you thought, but it'll get you to where you want to be.
I love that. I literally love that. One of the things I consider with properties and whatnot is kind of the execution of the project, and kind of the propensity for bills to balloon over the life cycle of a project. I've kind of created different formulas with different bands to give me an idea of severity, upside or downside. But I want to understand your process to building out a support network for your properties. Like, how do you find good inspectors? How do you find good contractors? Stuff like that.
I still build, like, I had a DM yesterday of someone who's like, hey, I saw you had this plumbing issue. Is that in Dallas? I'm a plumber here. And I'm like, it's in Ohio, but I can always put another plumber in my pipeline. So I think, I built them over 18 years, and I built them, like, my HVAC guy I met at a flea market who sold out there. So it's been a buildup of 18 years. It wasn't like I just went through and picked people out of a phone book. Now, I did hire people and I got screwed, and I had people that left with half done projects and lost 2000. Like, there was one that did half the job, got the inspection, asked for the second half of the money, and then just ghosted me. And that was something that, it's part of it, and I understand that. And yeah, that sucked. I think I was out $2,500 or $3,000. And yes, I did go through the due diligence of reporting him with his license and this and that. But then when that all started to unravel, he was using his dad's permit or license or
Perfect.
whatever it was. Right. So then the dad shows up and he's like, well, I'll do this to fix this. And I'm like, I've already paid someone else. So I think you're going to build a team over time. And I think being flexible and starting with what you have available. If you have a best friend that's a plumber, or you have someone, start with that. And that's what I did in Ohio. When I started, I had a plumber. I started with a plumber, and then I started with I had a friend that sold for, like, Home Depot supply, and I'm like, these are my two resources. And I just kind of have built a team off of that. And then I went into Facebook investing groups, and I'm like, hey guys, I have 14 properties. I need someone to mow. Do you guys have any referrals for someone to do lawn care? And that's really how I've built over time, is seeing others. I jumped into, like, bigger pocket forums, and I'm like, hey, I've got this commercial space that no banks want to loan me on. Any ideas? And they're like, have you tried this? And sure enough, I'm like, no, I haven't, but I'm going to. And I tried it. And then they're like, oh yeah, we'll loan to you. So I think being around others that are doing it, especially if they're in your area. And I was never like a bigger pocket subscriber, but I was just in the free forums that they have on their website. And that's how I found financing. And that's how I found other resources. And that's how I found, like, more durable flooring than what I was using. Because the first couple, I'm like, oh, these look really nice, but they last for like 6 months. And then I've got to replace flooring because they look so bad. And they're like, oh, do this. It's waterproof. Do the, so I think pivoting and going, there's stuff that I do now that I would have never done 18 years ago. And there's a lot of proactive stuff that I'll do that I'm like, oh, this is going to be an issue. Like, I knew that I had air conditioning issue at one unit. So last year in December, I'm like, let's just replace it now before we have another issue with it next year. It's I've already cycled through the life of this product. Let's do it now. And I think that's another thing that you see as an investor is, it's worth, taking a loss on it this year to get it running properly and up and running for this year. Cause I've had no calls and we're midway through the summer now. So I think that that's important as well. Cause people are like, well, what about the cash flow? What about this? What about that? When you have it coming in from multiple different sources, you can take that hit on that unit because you're profitable on the 4 other units or whatever the case may be. So I think that's important as well.
It sounds like a lot of effort you put in, even though that you're a capitalist swine slumlord. So it's really curious that you take the approach of fixing things even preemptively. It seems all off brand for those. And for those that can't read between the lines of the joke, I get the pleasure of seeing random tweets that Tom will highlight about people just calling them all sorts of, I think they're fun. Sometimes they can get creative. Sometimes it's a little repetitive. I think it would be nice to see a little more ingenuity out there. But there's a lot of people that have a lot of opinion about landlords, which I always find so fascinating. I imagine there's some bad ones out there, but you hit on a lot of what I would consider to be really not bad landlord practices. Like, you're really trying to take care of these places and the people. How has managing a book of rentals been for you? Because most of mine have been really simple. I have rented to a lot of military folks that are in town for 2 years and then they leave. And that's always an interesting market for me. But I'm curious how you fared with your tenants.
I've had like my fair share of crazy awful tenants. I think I've done 4 full evictions in 18 years, so I haven't had a lot of like ugly endings when you look at how many units I've had and how many tenants I've had over 19 years. But that's part of what hey, I want to sell this one because I don't want to deal with this tenant anymore, and traded it up or invested in a different area. And that's something that I've done a lot of, especially this year, where it's like, maybe this doesn't make sense to continue to do this and it's a cash flow negative, and trade it up. So I think investing in different types of neighborhoods and different classes of neighborhoods. I have an A property all the way down to, I have a D property in Toledo, Ohio that I bought for $11,000, but she's one of my best tenants in that D property. So you can't just classify, oh, you have a D property. I mean, when she applied, we had a ton of interest too. And this was another one that just kind of fell in my lap, where there was a Chrysler chip plant opening down the road. So everyone who worked there was like, I want to live 5 minutes away from work, so I don't have to do this drive in the winter. And when she applied, she's like, I just lost my husband. I can't take care of a house properly. I need a place. I want to sell our place, and I need a place that I can live in that I don't have to maintain. So it worked out great with her. And you would think, oh no, that's a rough neighborhood, but she lived down the street already. She knew the neighborhood very well. She's super responsive. She takes care of the house better than I could. So whenever I do go over, I'll bring her, like, I'll stop. There's a bakery really close there, and I'll just bring her something and just say hi whenever I'm in the neighborhood. But she keeps it clean and well kept. And most investors would be like, I wouldn't touch that with a 10-foot pole, but I've got a great tenant in there. So I've had some really, really positive ones. I have a couple that I used to self-manage, especially when I was starting, and they've been here for 12 or 13 years now. So they're still contacting me on stuff because I was the manager when they started, and they won't talk to the one that I pay. And that's okay. I mean, in general, I've had some bad ones, but the good outweigh the bad. And I think that that's important to explain to people.
I mean, we got to hear a bad one though. What's one of the fun ones that comes to the top of your mind?
I mean, I did have a really terrible one, probably like 2016, where the tenant, no matter what I did, was just not happy. They were demanding that I come over and I clean the windows at 11 o'clock at night. Like, it was just like crazy off the wall stuff. And it turned into, I couldn't handle it anymore. I turned it over to a management company. The management company ended up going through an eviction because they stopped paying. And I think that, people, just like houses or investments, look good on paper, and then in reality, they're not. And that was what happened with that tenant. So I had one steal my appliances to pay their rent before.
Nice.
They sold all. Yeah, when I got in there, I'm like, oh, this is how you paid last month. Okay, great.
Right. Well, at least you got paid with your own
With my own
appliances.
appliances, yes. So I've had a lot of crazy ups and downs over the years, and there's a lot of, like, even just recently I was posting about a tenant that it says it 100 times in the lease, and now I'm going to start posting signs about don't flush flushable wipes. But tenants, her response when I'm like, why are you flushing all these wipes? She's like, I didn't know. I'm like, you literally signed a page in the lease that says I will not do this. So I think that comes with the territory, and I think that is a learning pain. And I know that when I get that bill, I believe it's been fixed today. It's going to be something that she can't afford, and I'm not going to hound her for it. I have CapEx set aside for that property, and I will take care of it. But I'm not going to. In general, she's paying her rent. The house is okay every time I've been over at it, so I'm not going to like beat her down unless she. And when I say beat her down, I'm just talking about with
like following up and
yeah. But unless she,
listen, man, a physical beatdown's not outside of the equation though. Every once in a while, you got breaks some kneecaps.
I had a crazy one threaten my dog once. She's like, I know where she said, I know where, because she lived in the same complex as me, and she's like, I know when you go to work, and I know where your little dog is. I'm like, oh no, we're not doing this,
dude. I tell you what, there's a lot of threats that I would take personally, but as soon as it goes to that level, like, there's gonna be a Molotov cocktail sitting on your doorstep.
I could not wait wait for her to, we paid her to leave. It was one that we bought the tenant, or we bought the unit with the tenant in it.
Yeah.
And she was way below market, and we did a lease termination with her, and then she didn't leave after that. So we got her out, and I was thankful when that happened, because I wasn't worried about my dog anymore.
Right.
Nobody touches Woody. So anyways, we got way off subject there. I want to tell you a fun story about my first short-term rental. So I've had this short-term rental for about 10 months now, and it's just been friends and family and clients of mine who have been staying in it. So it finally went up, got approved, got all the correct insurance, and it goes up online. So I have a booking come through for it, an instant book, and it's for a company that wants to rent it to do some filming. And this is just this past weekend. And you're going in the darker direction than me. I'm like, yep, no problem. I sign everything. They send me a bunch of forms. I send them a form. I get payment. They get through. They check in last Friday, and it's been about 2 hours. I'm at the gym, and I get a call, and they're like, how do we get into the basement?
Yeah.
And I'm like, that's not rented. And I'm like, I keep that half, because I keep my personal items down there for when I stay there, and then I keep my cleaning supplies. So it's like a locked half of the basement, and then the other half with the washer and dryer is all accessible. And she's like, yeah, we want to get on that side. So I'm like, what are you filming down there that you need to get into the basement? And she's like, well, it's a Survivor thing. So I'm like, all right, we keep a key hidden here, and I let her go on that side. I don't even know if they filmed down there or not, but long story short, I go back and I start reading all the NDAs that I signed, and it's a they were filming a true crime, well-known true crime show at my house. And then
Dang it. I thought for sure it was a gangbang porno.
And that everyone goes to that, because that happens a lot in
Right.
Airbnbs, especially. Then the next day, one of them emails me. They're like, hey, we're not going to need it the following day, but we'll still pay, it's all good. We got everything that we need. And then they're like, by the way, do you know that you have a serial killer that lives 2 blocks away from you? And I'm like, no, I'm usually more afraid of like the ghost that lives in the attic.
Right.
And he's like, tell me more. So I actually I believe that I do have a ghost in the house. And I started telling the story and showed the little obituary of the little girl that died in the house in the early 1900s.
And is she haunting you?
No, she's really chill. If you're taking care of the house and have a good karma, she's all on board. And my nephews like left toys on the attic stairs for her. So we've had no issues, but this company had paid a security firm to watch the house, because they had hundreds of thousands of dollars worth of equipment in there for this filming. And in the report, they didn't have access to the house. The company did, but they were just doing the drive-throughs to make sure that no one was there messing with anything.
Like, well, except
that's so in the report, there were 3 times where they would go by and the attic light was on, then the attic light was off, then the attic light was on, and then when they got there that next day, they're like, the TV in the primary bedroom was on. And I'm like, did you guys forget to lock the attic? Was my response back to them. So I think that I probably do have a ghost, and I don't know my best method to disclose that in my listing or whatnot, because I've had no issues with her.
Yeah, well, she seems chill, and I mean, it's unlikely that that's just faulty wiring of some sort that's turning the upstairs light and the TV on. I imagine it's the ghost. And then if you lock the ghost upstairs, the ghost is respectful of the physical barrier of the door and doesn't go downstairs?
Believe so, yes.
Okay.
And then there's times where my nephew and my sister are like, I hear the typewriter, like they hear like something up there. So
she's tweeting too. She's just tweeting for her time frame.
She might be. Yeah, she passed away in 1918. She passed away in the house. We believe of the Spanish flu, and her name's Loretta. She's cool.
Okay. So it sounds like you and I need to go and spend a night there with Loretta. Maybe bring some sage for her, or does she not like sage?
We've already saged. The house has been saged since we've gotten it. And again, I have stayed there like 40 times and I've had no issues with any kind of bad. But my intentions on this house have always been I want to preserve it. It's in a historic district. I love the house.
What's
So
the what's the potential angle for like a haunted? I imagine there's got to be like a rental market for like haunted house and for paranormal activity people. Like that's got to be a market.
And the hotel that I was telling you about, the lady had already had a crew that came in and stayed overnight there, and they could never get a clear reading. So she's like, I don't think that this is
Ooh.
haunted. So maybe I reach out to her
Yeah.
and see if they can do it. But I have not had, and again, I've been in there for almost a year. I haven't had any issues, but I thought it was funny that my first guest
Yeah.
had this light going off and on, and the TV turned on when they left when no
Well,
one's in the house.
well, I also imagine if you're born in the early, 19, 18, 19s, it's like color TV's got to be pretty sick. I don't know. Was color TV? I don't think color TV was around then. So yeah,
No. Yeah.
yeah. So
All this stuff wasn't, there's quite a bit that wasn't around then.
yeah. Well, we just got to hook her up with like a laptop though, because the typewriter to, talk shit online, that's going to be, then you got to scan it, then you got to upload it. It's a big production. So maybe we just drop her off a laptop so that she can really get in her bag without having to be worrying about ink and all that stuff.
We'll even sign her up for a Twitter. I mean, I
Yeah.
think that it's on brand. So
Dude, that would actually be a hilarious part if you like create the paranormal activity side to that rental. You literally could set up a Twitter for her and like tweet for her and stuff. How cool would that be?
I don't want to because I don't want to disrespect her because I
Ooh.
don't want problems.
But it
And
seems like
that's
she seems fun.
so far. But I don't want to push it where she's like, why are you doing, I don't want issues. And I
So you
haven't had any.
so we don't want to monetize her.
Right.
What if you give her a cut?
But I want to respect her. I want to respect her house. I want to keep her house clean, and I'm good with her staying there. And even that's, you said saging. I've saged already. I don't, she's not doing anything to me or my house. She's hanging out up in the attic. There is one time that the cleaner came through and they made all the beds, and I'm telling you, there's a pink bedroom with a
Yeah.
twin bed. I think she came down and was jumping on the bed because you could like see where it looked like something was jumping on the bed after the cleaner had come through. So that's the most extreme that I've seen since in the past year.
I have to be honest, my biggest hope is that people who listen to this podcast will then understand your assessment of your ghost, and then everybody that goes there continues to, really build on this story for you.
I think it's going to be something that's, with the first guest giving that kind of feedback, I think it's something that's going to have to be disclosed and just say, Loretta lives upstairs,
Just
leave her
chill out.
alone,
Right.
leave her alone,
Just chill out.
and you'll be fine.
Yeah.
We got way off. I haven't had a podcast where I've gotten this off topic before, but I felt like I had to tell you my first short-term rental story.
Well, I mean, to be honest, this is perfectly on topic because there are no topics. It's whatever topics come up. And if it's little haunted Loretta playing with the lights, I mean, that's topical to me. I'm happier now that I know about her than before knowing about her.
Good.
Yeah.
So, and again, if Loretta's listening when this comes out next week, no disrespect to Loretta.
Zero disrespect, Loretta. It would actually be really nice to meet you sometime.
Her dad built the house, and her mom lived in the house. They built the house in 1905. The family owned it till 1979 when the mom passed away.
Yeah.
So that stayed in the family, and everyone who's owned this house has owned it a really long time. So there was a lady who bought it in 79 and lived in it till 96, and then the lady lived in it from 96 till 2020, and she sold it to me, or 2021, and sold it to me. So I don't think that there's a bad, if you see a quick sale, there could be something up there, but
Right.
everyone who's owned this has owned it I'm only the fourth owner, and it's 118 years old. So I don't think that the house is an issue.
Yeah. So she hasn't turned like murderous or anything. She's been relatively chill. That's good. Well, it's nice.
I would have. They had no shower in that house for 118 years. I put in the shower last year. They took baths for 118 years in both baths. I'm like, man, I don't know how you guys did this, but I can't take a bath.
Yeah.
I mean, I can if like I'm
Sure.
sick or something, but I need that shower at the end of a long day. So I put in a shower.
Well, maybe that's what got you in her good graces.
She's excited about the changes, and
It's her first shower.
Right. In 118 years. So,
It's a hot minute.
yep. All
Well,
right.
I can't think of a better ending note than a ghost story. So I can't thank you enough for coming to hang out and telling us about Loretta and some of your experiences. There's a couple of things that I want to talk to you about again in the future, specifically like inventory management, not just for like the eBang, but mostly for real estate, growing a portfolio, stuff like that. But we'll save that for another episode. But before we sign off, where can people find you?
I'm at the Frugal Gay 11 on Twitter, on Instagram, on TikTok, and I have a newsletter and I have a podcast, and it's at House Money Media on Twitter or Instagram, and it has a website, housemoneymedia.com.
Sweet. So what I'll do is I'll grab all those links. I'll throw them in the notes below so that people can check it out. And thanks again for coming to hang out. For everybody that was listening, thanks for hanging out to the end. Don't forget, like, subscribe, be an outlier, and we will see you guys later.